Ladies and gentlemen, the EU heads of state and government agree in principle. They want a so-called recovery fund for the post-corona period. The southern European countries are demanding a huge volume of up to 1,600 billion euros. They would prefer this huge sum to be financed by so-called corona bonds. But not only Germany rejects such joint and several liability for good reasons. An agreement on corona bonds is not in sight. But alternatives to corona bonds are also hardly capable of gaining a majority politically. The EU Commission, for example, would need collateral if it wanted to borrow money on the capital market. But to do so, the EU budget would have to be more than doubled, or the member states would have to provide guarantees on a large scale. No politically feasible alternatives to financing a large volume recovery funds are likely for the foreseeable future. The dispute between the south and the north of the currency union continues. This is putting pressure on the prices of government bonds of southern countries. In the end, the ECB will continue to step in to support the highly indebted countries via bond purchases, even though the Maastricht Treaty prohibits it from financing government expenditure. Even 10 years after the beginning of the sovereign debt crisis, the situation in the monetary union is not calming down. Thank you very much for your attention.